The decision is in, and already you can hear it. The hand ringing is loud and clear. Joining me now, QI Research CEO, Chief Strategist, Danielle DiMartino Booth. Just, Danielle, your initial reaction when you heard that.
For the first time since Paul Volcker, I will tell you that Jerome Hayden Powell defied the markets. They've never gone with less than a 79.8% probability of a move, one way or the other, and they went today at 61%.
But here's the thing I kept telling people. At Jackson Hole, that whole week leading to Jackson Hole, every member that spoke said gradual, gradual, gradual.
Yep.
I feel like he deliberately did not use that he kept the door open for this move.
He absolutely did, and he orchestrated this purposely, but he defied the markets. Charles, this is a good thing.
Let's talk about historically now. Okay, our first rate cut, going back 14 recessions. By the way, our buddy Kobasi put this together. I think it's fantastic. Unemployment rate in the past year, typically going into an unemployment rate that with the recession, right, up 9%, without a recession down 10. So look at this. I mean, the unemployment rate is rising so much faster than normal before first rate cut.
Right.
Real GDP, this is actually pretty good. You know, I'm going to change. I'm going to do this differently. I'm going to call that a red flag. I'm going to say this is okay. But look at this. The debt, U.S. debt up 123%,
Yep.
Obviously a red flag.
Right.
Savings rate has plummeted 2.9%.
Yep.
Normally it's 8.8%. So again,
Are we going to zero? Are we going negative?
You had a lot of red flags here.
A lot. Absolutely. Charles, the U.S. economy is not prepared for what the polls are telling us is going to be gridlock in terms of emergency measures, blowing up the deficit spending to alleviate the recession. We are not in a good place going into this as we have been historically.
Let's talk about another thing. I'm going to pick up a little bit on this. So the economy, right? One thing we talked about is savings. Foreign net savings, that's in the blue. When you just talk about a U.S. savings.
Net national savings, yes.
Negative. That's negative. I mean,
right.
How can an economy, this is not a soft landing. We just continue to consume more than we make.
No, I think Wall Street wanted to believe the soft landing narrative so badly that, as you said, only 9 out of 114 were even willing to go to 50 basis points. But that, what you just circled, that's reality.
So Jay Powell saw this. Bowman didn't necessarily see it, but she was always sort of giving off hawkish vibes.
He was going to get a dissent either way.
You made up a great point in your note, and I wanted to share it with the audience, right? With respect to recessions,
yes.
right? We talk about, you know, consumer spending and that being sort of the gauge. You say, no, look at private fixed investment, the blue line. Going back, these are historic recessions. That blue line is almost always, it's always been negative. Where is it now?
Right
Where are we now with the private fixed investment? 12
out of the last 13 months, we have been negative on a year-over-year basis. It determines 93% of recessions. Right. 93%. Not consumption. You can be in recession, as you can see, with consumption still growing.
So private fixed investment, if we had to draw the line, it'd be somewhere like that right now.
Correct.
So what now? What do you want to hear? You know, Powell's going to come up. I know you're going to join me later on. We'll try to analyze what he's saying and, of course, market reaction. What do you think he'll say, though? Because to your point, a lot of people who bought into 25 said, well, the signaling that he didn't truly telegraph it, or that somehow the markets are going to panic, that the Fed went off script, or Powell's gone off script.
I think that Powell is going to speak hawkishly and say that they are moving preemptively and that he still believes that he can engineer a soft landing. That there was a real discussion, as we saw on the air last meeting, there was a real discussion about a rate cut in July. Right. And all they're doing right now is making up for not having cut in the July meeting. Nothing, he's going to keep it very simple and maintain, I am data dependent going forward.
So, but what is it about the data that some folks say he shouldn't have gotten a 50 signal? What is it that, does he know something, though, about the data that's in the pipe?
They're saying the consumer's still spending.
Right.
And history, this is a Dallas Fed January report, says it doesn't matter if the consumer is still spending. You can still veer into recession.
As we have done many times. All right, so I want you to come back later, sit on the panel as we listen to the Q&A.